All right, let's discuss with Azar Jammine of Econometrics. Great to have you with us.
Thank you, Francis.
So why is this being received with such relish?
It's quite strange. First of all, there's been a momentum ever since Donald Trump was elected president. There's been a very positive momentum on financial markets, and that has led to a feeling that commodity prices are going to rise still further. Secondly, as you so rightly said in the preamble, I think people were fearing that Janet Yellen would speak in a way in which people would expect more than another 2 interest rate hikes this year, 3 or 4. And she said, no, 2 is probably going to be enough. And that calmed the markets and gave markets a further spurt generally. It also meant that if dollar interest rates are not going to rise quite as rapidly as previously expected, money flowed out of the dollar into other currencies and especially into emerging markets because sentiment was so good. And that also a weaker dollar led to a rise in the price of gold and platinum, which helped the rand still further. It's just one of these onward momentum.
So it's mainly because we're expecting a very gradual rise in interest rates rather than anything sharp, which was fueling the fear.
That's right. A gradual rise in interest rates combined with comments by Janet Yellen that said that, the American economy is doing just fine. It's not shooting the lights out, but inflation is seen to be, the risks on the upside are no greater than they are on the downside. Employment is being created, unemployment is coming down, and that the US economy is in a good space. And so everyone felt good. And when people feel good on financial markets, they're prepared to take risks. And emerging markets enjoy the support from risk appetite.
Even though it's better than expected for us, this situation, do you not agree that the rand is still doing marvelously well? Because I remember those fears. It was almost like if there's any increase in interest rates in America, we are going to suffer.
There's no question that is, and to some extent that is the big surprise, not only about the past 24 hours movements, but actually of the past 3 months movements. But one also needs to bear in mind that even at current levels, the rand is not frightfully expensive if you look at inflation differentials and where we've come from. In 2012, we were at 7 rand to the dollar. And yes, we have had higher inflation than the rest of the world of around 5–6% in the interim, and the rest of the world has had 1% inflation. So you would have expected the rand currently on that basis now to be around 10 or 11. Okay. So even at 12.70, it's still not seen as being excessive.
It's still a bargain.
Well, it's no longer a bargain, but it isn't that expensive yet.
Also, the US economy is now strong enough to absorb higher interest rates, inflation going up. So is that also leading to the shift in focus? Because that's good for us, I guess. Very
much so. In answer to one of the questions, what is this going to do for US consumers, Janet Yellen's response was, this message of this is that things are going well, and that's why we're raising interest rates, so that encouraged still more optimism.
But surely this means that the world believes that it will still be able to trade very well with the US, despite what Donald Trump has said in the past.
That is correct, and I think there's, and here we've got a window of opportunity because Trump is not going to be able to introduce all his very controversial measures this year. Many of them are only going to come in, see the light of day next year or the year thereafter. The same applies to that big fear surrounding Brexit. And so people are saying, well, in the interim, go for it. The trend is in our favor. Let's go for it.
And long may it last. So just tell me the implications for the South African economy of a stronger rand. Surely petrol going down, I guess, would be one of the
beauty is, for example, that the petrol price should come down next month, in spite of the fact that the fuel levy is going to rise by 30 cents a litre and the road accident fund levy by 9 cents per litre. More generally, it means that inflation this year will turn out to be lower than previously anticipated. Therefore, disposable income of consumers will be enhanced. And it also means that interest rates could possibly come down later in the year, which is also positive. Against that, you've got to bear in mind that we heard of some big tax hikes being announced a couple of weeks ago.
True, but targeting a small sliver at the top.
Actually, it's not such a small sliver, but it certainly isn't the majority of people in the country yet.
So in finality, would you say this is a good outcome, a good situation for us to be in, and you know, basically unless we shoot ourselves in the foot?
This is a good situation. It's not just whether we shoot ourselves in the foot, but also whether the Americans shoot themselves in the foot. There are two big risks at the moment. The one is from Trump putting, you know, his foot in it, and the second is domestic political upheaval. And the big fear that people have is of capture of the Treasury and the replacement of the Minister of Finance.
Sure, that at home. Just going back to Trump, because I have to ask you, an analyst yesterday said maybe investors will flock back to emerging markets if he really missteps in the US. Somehow we will become more attractive in that mix.
One of the, yeah, it's tempting to suggest that we might become relatively more attractive if Trump messes it up. On the other hand, the amazing thing about financial markets is when America sneezes and the rest of the world takes fright, money tends to flow back to the dollar because it is seen as the safe place to put your money. So, you know, it's not very clear what the outcome is going to be.
Funny markets. We're hearing
funny.
about funny democracy today. It's funny markets. Thank you so much, Azar Jammine from Econometrics.